Hello traders, and welcome to a new video on what I think is the most profitable polymarket strategy that I could ever think of. I'm going to make this video relatively quick and try to get you guys the information as soon as possible. What I will say is if you are interested in stuff like this and you like what I'm talking about, click the link in the description below and learn more. Polymarket. Polymarket is a prediction platform where you can bet on, just about anything, politics, crypto, whatever you want. Today, we're going to be talking about two political markets, not because there's anything special about that, but rather because of the amount of articles that are posted about it. Now, it is a known fact that people tend to overreact to news. It's a good thing to trade credible news quicker than other people. You can have a competitive advantage that way. When you trade markets like this, where you're betting money that something will happen, or you're betting money that something will not happen. And either way, you will make or lose money. Now, when it comes to articles, that is really what's going to drive these percentages and probabilities to change. I want to show you guys something that happened. Biden was diagnosed with COVID, mild COVID, but it came out 2 days ago around right here, and a bunch of articles started to pop off about it, as you can see. So what ended up happening? Well, the odds shot down from about 77% that he finishes his term, which I already think is quite high. I mean, quite low, sorry. I would buy that at 77. It shot down to 63. Now, if I show you guys the other market of no, you can see here that these odds shot up as well. People bought them up like crazy. You can see that the odds that he doesn't finish his term, about 22, 23%. It went up to 37. How can we make money on this? Well, one way to make money is really to identify when the public has stepped out of line, and there are a lot of articles about something. So when this was posted, you can see, of course, people will overreact. Now, if you believe with your own insight that 64% or 63% right down here is incredibly cheap, then you should probably buy it at 63. What kind of trade is this? This is actually a counter news trade, but I wouldn't call it that. Rather, what I would call it is more of a, you're trading against really everyone else's insights, everyone else's overreactions. So what ended up happening is a lot of people ended up trading it, and a lot of people ended up buying, no, he will not finish his term. But the correct decision you would have made or could have made would have been to buy this thing at about 63 or 64 if you knew that, of course, that this was mild. There are so many examples of this. I could make this video very, very long, but I'm just trying not to. Another one, which I find even more interesting, because this is a $20 million bet market. Biden drops out of the presidential race. The New York Times posted something about 21 hours ago saying that he is likely to, drop out. Now, when the New York Times posts something about him dropping out, that is not an official statement from Biden. That is just people saying, oh, I have sources, or, we have reason to believe that he might. Let's just go look at what the market did. So Biden chance of dropping out of the presidential race, it says it is a 77% chance. Now, what ended up happening, that's right now, what ended up happening is it went up to 90%, guys. That means that when this article was posted, it went up to 90%. Now, when we're making these bets, and it went down to 10%, as you can see here for the no market. When we're making these bets, guys, it's important actually to think about something called expected value and not on what will the outcome be. So if you believe that Biden will drop out of the presidential race, but he's not going to do it anytime soon, then actually buying no down here at about 10 or 11 would have been the best possible bet to have made. Actually, you would have tripled your money. Had you bought at the minimum price of 10 or 11, this market went up to 31. What that means is you could have bought immediately, and then the market went up triple. Now, realistically, you might have made only double or 2.5x, whatever amount of money you chose to put in. But you can see this is very liquid and it has a lot of money, and it's changing very, very, very rapidly. So what am I saying about this? Well, this is a two-pronged strategy, guys. The first thing is identifying an article and identifying if it really does change the odds fundamentally. Now, the New York Times posting about it, I think it does, change the true odds a little bit, but I don't think it changes the odds as much as people think. This thing went from no at 67% down to 11%. Now, for me, I think that would be a very good buying opportunity, especially because as long as he doesn't drop out within like a day, you can see the market's just going to go back to equilibrium. So what is this strategy? Well, what this strategy is essentially is going to Polymarket, looking at anything like CrowdStrike, outage, you look on Twitter, what the CEO is saying. You look at any of these right here. When will Biden drop out? Will he drop out? Stuff like that. And what you want to look at is what are major publications saying? And are people overreacting to major publications? What I want you to do with this, and what I'm going to do, is I treat this as a volatility event where I can make a counter bet, a bet against most people, and maybe get better odds than normal. So when an article gets posted, it causes a ton of volatility, right? You can see things go wild, article posted, and you go down to 11. You know, the market, yes, a lot of volatility, it goes up here. Now, when that happens, you have a chance to say, hey, I think that the crowd is piling onto this trade a little bit too much. It's trading at, probability of yes at 90 is just a little too much. I don't think he's going to do it anytime soon or maybe at all. And then you can see really these are phenomenal opportunities for you to trade. So what I've found time and time again, guys, is when articles get posted by major publications like Reuters, New York Times, BBC, NBC News, big publishers, what's going to happen is people overreact. And that changes the odds of these markets. And if you assign, like, let's say, you assign a 30% chance that he does not drop out of the presidential race, well, then buying this at 24 is a great idea. Because what you could do is buy it at 24 and then, I don't know, either just hold it or sell it at 30. Okay. This is the strategy that I have been studying for many days, and I hope that you guys find it kind of helpful. Essentially what it is boiled down to is you look at major publishers and you see if the crowd is overreacting, and you need to assess in your own head if the odds are worth it to take the other side. Happy trading.